Hey, this is Justin with DayTradeTheMarkets.com on Monday, January 14th, and I wanted to do something a little bit different today. I wanted to look at soybeans and corn and wheat, some of the agriculture futures. Just something I don't do very often. In full disclosure, I typically don't trade the ags, but somebody asked me about that, so I thought I would just use it and just show how really on any market the logic stays the same. You can use this on any market. So just talk about some of this. And part of the reason also is, I mean, if you look at the here is the emini S&P today. Was a pretty choppy day. You can see, I'll just break this down real quick for you in case most of the people trade that are watching this, but you can see early on our first major structure was this level 2 selling bar, had some follow through on this next level 2 strong selling bar, another strong selling bar, another one here. This high is finally tested, it held, but then when we tested into the support zone, you can see we started to bounce. Once we took out the high of this level 2 selling bar right in here and then tested the high of this one, it's basically telling us that it's not telling us that bulls have come back into the market, because we haven't, at this point, we hadn't seen any true bullish evidence. We didn't see that until here. But what it is telling us is this pure wave of selling pressure could not get past this support zone, and now we're in essentially a chop zone until we can see, at this point, as we're chopping back and forth, we want to see, do we either get another move down toward these lows, or do we get some strong buying like we had it right here, in which case we'll test these highs. So you can see we had this level 3 buying aggression bar, and obviously the first thing we want to know is, does this low hold? And it didn't get tested for a while, but certainly it did hold. Once that comes in, the high's taken out, our expectation would be that we're going to at least go and test the highs for the day, which we do here, along with this resistance zone, which is just a tick or so lower, and we want to see if we can get through that, and you can see that we couldn't. We tested back and forth. This is just kind of a textbook choppy day. Now near the cash close it gets a little wild. Just a textbook choppy day. And hopefully, if you saw the videos I did last week about chop versus trend, that's starting to kind of come together a little bit. But anyway, wanted to look at some different markets. Like I said, let's look at the soy, corn, and wheat. Somebody asked me about that, but again, the same logic would apply. So if we put on the here is the soybeans, and this is a 2-minute chart. You could use this on any time frame. Some of these more active markets I like to put on a 2-minute chart, just my personal preference. But you can see that the last bar of the day Friday was a level 3 buying aggression bar. We had a big gap up. We opened with some level 1s, and then we had a level 3 buying aggression bar. So extreme buying aggression coming into the market. You can see our filters already strongly bullish at that point. So we want to ask ourselves, can the low of this bar hold, and will we take out the high and have a full bar above? Not only does the low hold, the high is taken out on another level 3 bar, and then another one again. So at this point, it's pretty firmly established that that buyers are in control. So I mean, you want to ask yourself at this point, where do you get in? One way is just to go on a pure breakout market order. That's a little bit more aggressive. Another way is this, I've talked about this last week as well. Whenever you have 2 of these level 3 bars in a row, it's kind of what we call the sweet spot. You can see where they overlap right there. That's a good spot to be looking to get in. Here's another one right here. That's a good spot to look to be getting in. You can see that held up nicely. You can see that the market's fully in control at this point. And until the low of these level 3 waves get taken out, buyers are still in control. Here we make new highs on a level 3. Can the low of that hold? That's what we want to ask ourselves. Yes, it can. Here's another one on the high. Can the low of that hold? And obviously trying to buy toward this green zone obviously makes a lot of sense. The market was just so strong at that point that we couldn't even do that. Here's another one. Can the low of that hold? It was finally taken out. This finally had a level 3 taken out here on a level 3 selling. So you can see that it's showing us that some selling was starting to come into the market, but still toward the end of the day the zone held. But again, the point being, what's the evidence telling us? What's the order flow telling us? Which side is more aggressive and how dominant are they? And you can see that early on, we had some, obviously we had gapped up, and so we want to ask ourselves, are we going to fill the gap or are we going to take off? And you can see early on, very extreme buying aggression, extreme buying aggression, extreme buying aggression, extreme buying aggression, and so forth. It's telling you bulls are very firmly in control of this market. So happens to be soybeans. Same logic would apply to any market. We see this all the time. Just wanted to show this in soybeans. Look at something a little bit different. Let's look at corn next. And again, same thing here. Ended Friday with the last bar of the day, level 3 buying aggression bar. We gap up. Now this is a textbook choppy market. This is a little bit different than what we just looked at with the soybeans. Our first structure is this level 2, not a level 3, but a level 2 selling aggression bar. Can we get follow through? Do we get rejection? We don't really have either. You can see we don't have a full bar above it or below it. And then we have a level 2 buying bars. Can we follow through or rejection? Well, rejection. And then you can see these support resistance zones form, and we just kind of bounce off of these the rest of the day. No follow through whenever we have a buying aggression bar, no real follow through when we have a selling aggression bar. Textbook chop, back and forth, back and forth. So a little bit different style of market. Same logic would apply. You could see in this case the filter was basically neutral all day long. So let's look at the wheat now. This is a little bit different. The last bar of the day on Friday was a level 3 selling aggression bar. So do we get follow through? No. Do we get some rejection? Yes, we do. And we gapped up. So let's look at what the structure is telling us. First structure is a strong selling aggression bar. Do we get a full bar above or full bar below? Well, full bar below, with another selling aggression bar right before that. We test down to here, we decelerate. Here's some buying that's coming into the market. So we don't have any follow through. We couldn't make new lows. In fact, right when we tested the lows, we decelerated, and then some buying aggression came in. Here's some more buying aggression right in here. Level 3 buying aggression. Can the low hold? Well, yeah, it tested within a few ticks of it. We make new, we bounce off of the resistance zone there, make new highs on a level 2 bar. Can the low of that hold? Yes. Make new highs on a level 3. However, the very next bar decelerates on the high of the day, and another level 3, and the level 3 selling aggression bar, extreme selling aggression, comes in off of the high of the day. So what that's telling us is that potential capitulation, the market had auctioned high enough to attract some selling, and some aggressive selling stepped in the market. That's telling you right on the highs that that's what's happening, followed by another one. We take out the low. This low of this level 3 doesn't hold, and it's even taken out on this level, another level 3 selling aggression bar. That high holds perfectly. Okay. We bounce off of the support, but then we take it out down here. We bounce off of the resistance here, and you can see that right off toward the high of the day, our filter's turning. So it's telling us pretty early on that if you were long from somewhere in here, probably want to get out. Doesn't necessarily mean get short, but it's giving you some pretty good evidence that some selling is coming into the market. Okay, bounce off of the resistance here, test this caution zone. It holds toward the end of the day. So again, same logic applies to any of the markets that we look at. This just happens to be the, soybeans, corn, wheat, but same deal. So hopefully, if you're interested in those markets, that makes some sense. And even if you don't trade those markets like me, I don't typically trade those markets. I look at them every now and then, but just hopefully you got something out of the lesson anyway, in terms of helping to look at what the evidence is telling you, because it's all about asking yourself, okay, what is the evidence telling me? What's the market telling me? Okay, now how can I utilize that information to increase my edge, to avoid a bad trade, to get into a good trade, and so forth? And you keep doing that. You keep focusing on that thought process, making good decisions. The results, they take care of themselves. So hopefully that makes sense. If you have any questions, by all means, let us know. Otherwise, have a good evening, and we'll talk soon. Thanks.